Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update. It's going to be quite a fun one. We're going to be essentially arguing with Peter Schiff. I have no beef with Peter. He does what he does. You know, I am actually bullish on gold. I'm really bullish on anything that is a store of value, certainly a natural store of value outside of the fiat systems. Anything that is pegged against the dollar or other fiat systems, which are debt-based, which means they inherently have to inflate, I am bullish on over the long-term time horizon. So this isn't a stab at Peter, but he's essentially saying that Bitcoin is dead, given the fact that we've saw some significant moves up for gold and silver and the stock market, but Bitcoin hasn't really followed along. We're going to rebuke that, and we're actually going to be overlaying the gold chart, because one thing you guys know that we do, and it's how we stay ahead of the game, it's how we trade profitably most days, is simply we do cross-market analysis. You will often be able to direct or tell the direction of the crypto market based on the other markets. So how well is the stock market doing in the US? How well is the S&P doing? How well is the FTSE doing? What are the Asian markets looking at? How's gold looking? And of course, the Dixie. You'll often get a good feel of what way the crypto market is going based on what those markets are doing. But we are going to overlay gold onto the Bitcoin chart and really talk about that. He also talks about the pivot. The markets are now starting to price in a pivot. This comes, of course, after the UN calls on the Fed and other central banks to halt interest rate hikes. This was, I think, really good or very accurately sums up what's going on right now from Michael Brown, Mr. M. Brown on Twitter. Stocks rallying equals financial conditions loosening. That's the opposite of what the Fed are trying to engineer. Hence, the more the markets rally, in my opinion, the lower chance of a dovish Fed pivot. So whilst markets and you know, if the Fed haven't pivoted on this kind of market destruction that we've seen so far, we'll take a look at the Nasdaq. Nasdaq is down. Do we have any draws on here? We always have draws on. Nasdaq is down, you know, 31%. The Fed haven't pivoted there, okay? So they don't care about markets to a degree. They care about bringing inflation down. People often forget why we are on this interest rate hiking regime. If you take it at face value, they're doing it essentially to bring and kill off demand and bring it in line with supply. So that means that essentially what's happening is, and we explained how money worked in yesterday's video, and also how this idea of liquidity getting drained works, because it has to go back into the debt markets, because you have to have more dollars to pay off that debt on a kind of mass scale. So the Fed are really trying to kill off inflation by doing this. They're not bothered about the markets, and if the markets are rallying, well, that's kind of showing that the Fed and what they're doing isn't really, you know, that doesn't support them turning, because essentially they're going, okay, well, if markets can rally in these conditions, people have still got money. You know, demand potentially hasn't been killed off as much as we potentially want it to. Almost a year ago, we spoke about, you know, we've had all this wealth creation with March 2020 and this huge print-a-thon of money. You know, we can just keep on the Nasdaq and use it. Do we now have to see the wealth destruction of that? And that's what I think we're on. I think a lot of March 2020 onwards is wealth is going to get essentially redirected. It's already doing so through inflation. It's going to, you know, massive companies like OPEC and so on. And we're going to talk about OPEC that have essentially came out and said they're going to decrease the production of oil to kind of counteract Biden's genius plan of dumping the reserves onto the market to bring the price down artificially, whilst there's still a big issue with supply chains and so on and so forth. So anyway, I'm kind of rambling on now, guys. So let's really dive into it. I also want to address, I see lots and lots of people out there essentially think that we are going to play out in the exact same manner. I think I have my Bitcoin 4-year cycle chart on. Yeah, so this is a chart. We were looking at this chart well in the bear market, guys, on the channel. If you go to the start of this channel and go to my earlier videos, you'll see them. But essentially, Bitcoin's just followed this kind of 4-year cycle theory. And I think what a lot of people are looking at and really hoping for, and we will use this chart, is that markets are just going to go essentially sideways until the next halvening. Now, I do not subscribe to that at all, because I think that given the fact that markets are moving externally, I would hate for markets to go sideways, by the way, for a trader, guys. We'd probably be going and trading something else on a day trading perspective. But people think that markets are essentially just going to go sideways and do something, you know, similar to this. We just go sideways, halvening comes around, and we start pumping into the halvening. That's what people are essentially looking at. I do not subscribe to that one bit. Certainly, if we are entering what is going to be a deeper recession, you know, we've done a lot of analysis looking at where we currently are way before everyone was getting on the bandwagon on Twitter and YouTube, and where we were just before we entered this sort of 2008 Lehman's moment, or here. You know, we still think we have a capitulation to come for the stock market. We think that that has a lot to do probably with the yield curve, and probably a lot to do with the debt markets. And we will talk about the debt markets. We saw real shakiness from the bond market, which caused the Bank of England to step in. However, even though the Bank of England stepped in, the bond market is starting to figure out that the Bank of England didn't fix everything by buying a few 30-year bonds. Absolutely not. And this is why we're seeing yields continue to climb and debt continues to go down. Nobody wants the debt. The governments are essentially the last resort buyer. And, you know, that causes more inflation. It almost enters this kind of death spiral, if you will. Currencies enter this kind of end of days death spiral, which is something that we're genuinely concerned about, which is why, back to my starting comment in regards to the fact that I'm bullish on gold, and people go, well, what? You're in crypto. Yeah, you can be bullish on both things. And really, for me, I'm bullish on anything that is pegged against the fiat systems. So anything that's USD against whatever asset, gold, Bitcoin, you know, I'm betting on the other asset, because I understand that this system inherently, go and watch my other video yesterday, has to be inflationary, and you know, proliferation is just part of paying back debt, basically, and it's a debt-based system that we move on. So let's just wrap up this comment that I get all the time. I don't think markets are just going to go sideways until March, until the next halvening. I think that they are going to move with other markets, and like I say, if I think we're going to get this drop for the stock market, and we're going to see that further downside continuation, crypto is going to follow. I can actually even still see gold, even though it's shown strength. For me, you're just coming up and retesting this. Not sure when we put these draws on. You're just coming up and retesting this level that you broke from. And I think the paper price, moves, in all honesty, just like in many ways, just like a stock does. It moves like a liquid asset, or a risk asset almost, even though gold should almost be a safety vehicle. But because we live in this kind of derivatives-based world, it moves very much in tandem with crypto and the stock market. So let's get on to Peter Schiff's comment, and then we'll get into a little bit of other market news, and then I will love and leave you. We do have a bit of crypto news. Near Protocol partners with Google Cloud to support Web3 development. So Peter Schiff is saying here, the markets are now starting to price in the Fed pivot, and Bitcoin can't even hold a rally above 20K. I do agree with them on that. It's very poor performance from Bitcoin. It's a nightmare day trading this, because it just goes one way and then retraces. In contrast, gold is up 6%, silver is up 15%, and the GDXJ is up 24%. Bitcoin is done. It's not an inflation hedge, and won't rally with gold when the Fed folds. So the thing is with gold is, has gold been an inflation hedge? You know, this is the real question. Over a long enough time horizon, yes, it has. But if you kind of compare it with Bitcoin, and we can do that by overlaying them, you know, these guys are very much moved in sync. Pretty perfectly in sync. So Bitcoin's sort of moving with gold. Gold and Bitcoin are moving with the stock market. What's the driver of markets, ladies and gentlemen? Money. Liquidity. And we're in an environment now, and if they continue, and if a pivot doesn't come, and what I mean by a pivot isn't they just stop hiking interest rates, because if we stay where we are, you're still going to see, we're already seeing record numbers of sort of defaults in certain markets. We're already seeing that sort of slam down take place in certain areas. By pivot, I mean they start to undo rate hikes, so they start to reduce them, and they start to reduce them, you know, significantly, which has been called for. But I'm going to make the argument that we will know when the debt markets are going to reverse. This is the 30-day, and we'll cover these up for now, and then we'll go back to our Bitcoin chart. This is the 30-day Fed funds futures. I don't see a pivot here. Euro dollars, slight break, but we've had breaks before. You know, and what's gold doing? It's extremely correlated. Look at this slight break, rally, slight break, rally. It just follows the interest rate hiking regime. Actually, rather accurately. So this comment, as much as I do like Peter, I think I better go and like the tweet. I do think he puts up some good arguments, but I think, first of all, I don't think he really understands Bitcoin, and I think that Bitcoin, in some ways, certainly the paper price is in the same boat. And Bitcoin and silver and gold, you know, I'm bullish on all three of those because I think that essentially anything against a proliferating fiat system is going to go up. And the real thing, and I was thinking about this last night, you know, when Bitcoin and gold and silver really come into its own is when we have this kind of out of control death spiral for fiat systems. So they have to continue to print, but at the same time, you know, which devalues the debt, but at the same time hold up the debt, which they have to do via printing. You know, I think when people start to wake up and go, F this, you know, we're not spending, you know, 60 years of our life and then getting a measly pension for this fiat system that they can just control, manipulate, and inflate. Then we go to these real assets. I think all three are going to do actually really well. And I do genuinely believe this when I say this, guys. I honestly see in my lifetime that the fiat systems are going to fail. And that doesn't mean that we don't port over to something else, a rebranded version. But as it currently sits, I don't see, because otherwise it's too easy. Essentially, we just have to follow the liquidity. We have to follow the interest rate hikes. When we go back to zero, everything goes bullish again. Or when we start to head that way. Another quick point on gold is actually gold started to rally here before Bitcoin. Also rallied here before we got this rally, and then we got the March slam down, and actually, you know, rallied at the same time because everything did. But often will lead Bitcoin's price action. Can you see what I'm trying to draw here? So gold will often lead Bitcoin. So gold will move before Bitcoin, okay? Well, does that mean that this rally is going to now be followed? I'm actually on a, today, and it's a pretty mixed day, would rather bias along here than a short. So maybe we do get this continuation. You guys know we've been looking at this head and shoulders pattern that we do think will eventually play out. We've just said maybe you get more of a pronounced second peaked right shoulder, just like you had your two peaked left shoulder. And maybe you sort of come into this sort of 21, you know, 22K range potentially before we get that slam down. But what I don't want to see is Bitcoin just go sideways for a little bit longer, certainly whilst other markets are making big moves. You know, I've been about in crypto when there hasn't really been a lot to have from it in terms of, you know, markets have just gone sideways on very low volume. That shows a real lack of interest in the asset, which is something that I don't really want to happen. So now that we've sort of rebuked Peter Schiff, you know, also the pivot narrative. Again, if markets are rallying, are the Fed really going to pivot? They've already shown they don't give a damn about the markets. They certainly going down, so they're certainly probably not going to be too keen on them going up. A little bit of TR on Bitcoin, you know, we're still biased that, and we do believe that, you know, it's a matter of time before you see that further downside continuation. I think you're very much just doing what you did here, where you form this kind of base. You did a similar thing here. You did a similar thing here. You know, I think you're doing a similar thing here that you're going to break through. I think that eventually comes, but how that happens is the real question. Do we get more of a pronounced peak before we get that slam down, you know, really building that liquidity up? Potentially, and sort of squeezing the longs out, taking it to the downside, but we will see. It's still very, very early days across the board. There are a number of altcoins that we are looking to long today. However, very tight stops because we're kind of betting against the larger trend. Let's get into a little bit of news. The US delivers angry rebuke of massive OPEC plus production cut, and it could backfire for Saudi Arabia. So there's a lot. I'm not even going to get down the deep, dark rabbit hole that sometimes I end up on the path of on this channel. But essentially, Biden came out. We saw, let's pull up the crude oil chart. We got charts for all of this. It's why being a market technician is so useful, because you're going to have a way better view of things than people that don't look into it. Here, and we don't need a 4-hour chart for this, we saw Biden come out and essentially start to dump oil. start to take away their reserves and dump it onto the market to bring down the prices. And also he gave a load of angry messages, although that guy getting angry is just like, you know, you might as well, it's like a kitten meowing, you know. Essentially, you know, we've seen this, but now what we're seeing, and remember oil is a huge driver of inflation, is we're seeing the likes of OPEC go, okay, you want to play that game, you want to dump and try and bring down the price of oil, we will basically just cut our production. So we'll cause even more of a supply squeeze than we already have. And certainly we know with what's going on in Russia, there's a massive supply squeeze. So this is going to be very, very interesting. They're basically saying this is going to jeopardize the alliance between the US. I'd be surprised if the US try and jeopardize any more alliances. Europe's gas shortage is almost, Europe's gas storage is almost full for winter, but the IEA fears next year may be very difficult. So this is positive news in terms of the fact that their storage is not is essentially full. You know, we'll see how it gets on. I still think we're in for a winter of discontent, in my opinion. You know, I don't see this winter being a particularly nice one. However, you know, there's a lot, you know, that can happen from now and then. Just like with markets, okay, we're bearish, but we're bearish because of the conditions. If those conditions change, if they start lowering interest rates, if they start printing money again, we've got every reason to turn bullish. And technically, if that happened today, you would have this double bottom. But that is not the case. So we keep on with the bias that we have until we see reason to change. And by the way, if this was the bottom, which I don't think it is, bearing in mind you had all the bottom callers back here in July, they were all turned out to be wrong as we put in a new lower close. You know, if this was the bottom, we've still won because we got out at 44k. So we've doubled our Bitcoin holdings and triple, quadrupled, even sometimes 10x'd our altcoin holdings just by getting in here. That's without lower prices. So I'm not fussed whether this is the bottom or not. Right? I have nothing to gain from telling you that I don't think it is. In fact, I have more to lose from telling you and being honest, because we know we live in a corrupt world full of liars. You know, I just don't think this is the bottom. We tried to stress that. I do think the yield curve inversion is going to come down hard in terms of we're going to get the fallout from it. Britain's shadow banking system is raising serious concerns after the bond market storm. The Bank of England was forced to intervene in the long-dated bond market after a steep sell-off of government bonds, known as gilts. This threatens the country's financial stability. So even though they've stepped in, yields continue to rise and debt continues to decrease. I think we are going into a debt-based failure. And I think this is going to be catastrophic. And the reason this is catastrophic is because everybody's leveled up on debt. And essentially what happens is, you know, your pension funds, for example, one reason that the Bank of England had to step in, they can't just let this market fall, is because pensions are stuffed with it, because they've been government mandated to do so in the name of stability. When the system started out, the fiat system, it had a level of stability to it. The problem is, the bigger that it gets, the bigger the volatility that comes with it. It's like the crashes that we see get more and more. So this doesn't have to be March 2008. We don't have to go into that. But I think the course that we're on right now is very much leading us to it. And you can see that, you know, there are real issues across the board. A little bit of good crypto news. Near Protocol partner with Google Cloud to support Web3 development. We're going to do a video actually solely on all the amazing developments taking place within the crypto space, because it's every single day now, guys. We're getting a new major company, or Google or Microsoft or Apple, sort of venturing over and building within the crypto space. That, in my opinion, is because this is the new asset class and it is going to change the world. I've rambled on for long enough. Just a quick recap on a day trading basis. It's a hard call. What's going to happen today? Your futures markets are down. The dollar is putting in a decent rally. Dollar rallied yesterday, bringing everything down, but then everything retraced. Gold is down, FTSE's down, future market is down. We'll see what the open brings. Bitcoin actually holding up relatively well. I have a bias that today we could probably squeeze a long out. May not happen, but remember, from an investment thesis, we are not biased here, and we're waiting for those lower prices that are going to come. In my opinion, as a result of people having to sell their assets to make their sort of daily payments, their utility bills, and so on and so forth. All I've got for you in this video, guys, if you've enjoyed the content, a like is always appreciated, so is a comment. I look forward to seeing each and every one of you in the next one. Thanks a lot for watching, ladies and gents.